Good evening. This is the Elliott Wave update for the S&P 500 for Wednesday, December 8th, 2021. The S&P continues to just roll through or trace out the corresponding waves as it continues higher within the minor fifth wave advance. And just to do a very quick recap, I had marked the current all-time high at 47.40 as the finishing point of minor wave 3. So there was quite an adjustment of moving that over several weeks and putting it there. And the decline that we had down to the low at 44.92 is the completion point for minor wave 4. So from off of that tremendous rally that began on Friday, last Friday's expiration, continued on Sunday as globex opened. We had a quick wave 1, wave 2, and then we have this spectacular third wave. And I want to open that up because it truly was exactly what I continue to refer to when I talk about that we're entering into a third wave. Whether that third wave is up or down, that still should produce the same type of patterns. And the strength of the wave, the strength of the move, the expansiveness of the move as it extends. And so that's what happened here. And I just want to quickly go over that we have, these are all of 3. So it would be 1 of 3, and we had 2 of 3. And then that third wave subdivided in and of itself, finishing up here. So we had wave 3 of 3 right in there. And it was beautiful. And this was the point of recognition. This is where the majority of the market participants realized we're going up. The tone has changed. The mood has changed. Positions need to be changed. Whatever that decision is, this was one area where that was quite evident. And it just rolled right around the clock. It started in the US, then it went into globex, and then it got back to the US, and we just continued that rally. Now, what I was looking for as of yesterday was a small fourth, an additional new high above in the current sequence, and then we would slip into a little bit larger fourth wave. Well, we got that perfectly. We had a little bit of a decline. That was the 4. Here was the 5 to finish the third, the minute third. So that subdivision was beautiful, all the way down, all the way up. So that finished the internal third. That was the internal 4. So the 4 of 3, and there was the 5 and the 3. So minute 3 is now done. Now we're into that minute fourth wave correction. And to tell you the truth, I really still believe that we only got wave A and likely wave B here. And so I'm not going to be quick to judge these lows, even though they're very close to that initial support, which I believed because of the nature of the rally that preceding this and will follow this, that the buy pressure is going to continue to hold the market and not necessarily allow it to drop down to the most common retracement level, which is 0.382. And that would be at 46.43. But we did get very close to that 46.63 level. And actually 69, excuse me. And basically touched this inside 382. And that would be for the rally. But so what was resistance on the way up becomes support on the way down. And it did reach back to that, which was right about at 74. So then we picked up the rally again. Now, what we need to now just watch for, if the market overnight does move, or even if it waits until tomorrow, and we then, before we slide back lower, we end up back above 47.12, then more than likely, this is where that minute fourth wave ended, and we would then begin the minute fifth wave. Now, one additional thing that I will add here is I'm counting these as minute. Now, we have to be very careful because, again, this is the zone that I'm looking for the entire move to be finished. And then again, that would also stack everything up to finish right there as well. But I don't want to be caught up in counting too quickly. So I am only willing to count out that it's 5 waves and the third is beautiful, extended, and everything is as it should be. But it's still, as we get all the way up to that 5, might only be the first wave. It depends on what's going to power it behind. So we still have a lot to put together before anything can be declared over, before any, looking at stronger downside moves. I don't want to jump the gun. I don't want to be too impatient because I've been waiting for the start of this larger correction now for several months. And the market's kind of just letting me know, sorry, we are not done yet and we're not ready, and that's fine. So now I want to exhibit patience along with the market in completing the task at hand. So word of caution that the degree may change and the market will tell us very quickly what the degree will be. So for right now, though, I'm counting them as minute. And this would, wherever this completes, whether it swings higher or whether it swings lower, forcing the completion here or possibly down to that 50. It would not be incredibly surprising to me to see the S&P move lower again and get itself down to 4660 and then begin to move. But as we get closer to expiration Friday, then we've got all of these additional stocks that are heavy in the S&P are still in play, the largest of them being Apple. The Apple computer managed to close above 175. The options volumes are extraordinary in Apple right now. There is so much trading going on. And let me just kind of, let's take a peek at the stock first. 116 million shares of Apple traded today. And the volume in the NASDAQ itself it wasn't terrible, but it wasn't as great as we saw on the beginning of the week when we just flew higher and we saw a huge volume across the board in the S&P and all the way down. So, but right now it's not bad volume, but it's not the greatest volume. Now, just take a quick look and let's put Apple back up there so that I can show you. So Apple does have a heavy weighting in the S&P as well. But look at this. These are the December 10th is the expiration, but the December calls, the 175 calls, 411,000 traded today. So we're up there in those bigger numbers. But what I'm noticing is they're starting to come in and build up on the puts. And remember that I was talking about that, it's a gamma squeeze. So, before the stock actually gets in the money, so the strike is now in the money, that the deltas don't really zip up to 100. But right now that they're now in the money, the delta is still about 56. So for every, when you're trying to hedge, if you're the seller of these calls, you're going to hedge it with the stock. Now, so you're not hedging it 1-to-1. Some people may be, but if you're just hedging it according to what your delta position tells you, you're not going to be doing it 1-to-1. You're going to be doing it like 2-to-1. So, it's like a 50 delta. So you're only really hedging half of what could really be there. But as this gets closer to Friday and it hangs out at 175, that delta will increase and increase because the gamma is telling you it's going to increase. And so that's where we get that gamma squeeze. So what happens is, as it gets closer to Friday and it still is in the money, then that delta will be 100. then we're going to get a lot more play in the stock that traders who've kind of hung on there are going to have to adjust and add and cover those deltas. So that's what I talk about. And so that could add another layer of buy pressure on the stock. But what I seem to think, I just think that if you're a seller of puts, then you're willing to get long the stock. So you're giving somebody else the right to sell you the stock. And so if it broke back down below 170, then I see that a lot of them are covering these calls down here. So we'll see. There's a lot kind of going on. And either that or they're just kind of selling some gamma and some delta up, at this level. So a lot of plays going on, a lot of option stuff. But back to the index itself, that I think that's what's going to keep us alive and keep us on our toes in terms of moving in the market. Because Apple does have a heavy weighting in the S&P, and it also has a heavy weighting, of course, the heaviest weighting in the NASDAQ 100. So for tomorrow, I think we still need to leave open the possibility that the market, excuse me, again turns lower and begins to head back down towards the lows, which is about 46.73, and possibly down below, because from this level, if we're getting that C wave down, if this is A, B, looking for that C to complete the 4, then being that it's not necessarily a flat, I would look for it to break below 46.74. And it doesn't have to get far. I mean, it can go to 46.69, 46.70, and that could complete it. But if I had to look, this high is 47.12, and this high is 47.03, so it's $9. And if I had to put $9 away from this level, which is 69, right there, 46.60. So the possibility of it moving down to the 50 moving average, the hourly 50, is, I would say, at least 50% probability of that occurring. Now, if we get up above 47.12 first and continue to rally, then the 4 would be placed here. And we would then be in that a fifth wave advance. And so bottom line on the whole picture, I continue to look for new all-time highs before this total advance, whether this gets marked as minute 1 up here, but before all of this total advance is complete, I'm looking for it to break at least towards 47.86, if not higher. And you can see we have quite a bit of resistance, not quite a bit, but we've got enough. 47.86, 48.27, 48.66, 49.68. That is where minor wave 5 will equal minor wave 3. That's up here at 49.68. Is that possible? Sure is. Again, right? Depends on how the market does and what we end up having to count these moves as. So if this is a sub-minute level, then we've got a lot more to go. But right now, I'm basically just trying to follow what the market is telling me and working on that level. So my first target for new highs is 47.86 in that area. So for tomorrow, again, let's keep our eyes open and our possibilities open that the market may turn, head lower, finish this 4th wave. Our support comes in at 74, then 69, and then 46.60. So we got 46.73, 46.69, 46.60. Not that bad of a move, but it's going to seem that way because it should come in quickly like we did today and just bing, 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 and get there, and then the buyers will come back in, pretty much as they did today. Except now, if it finishes that 4th wave, I'm not looking for it to take a rest before it starts heading up, getting itself above 47.12 and on up towards new highs. Continue to play with the moving averages. They do continue to give us the entries, let us know maybe where the exits are going to be. Then I'm using the Fibonacci. So we have a lot of things we can add, put together. They're going to keep us in a trade or get us out of a trade. So the trading was not as smooth or as easy today as it was yesterday and also Monday, where the trend was evident, even though we had little moments of selling and they were tradable. The bias was push. The bias was up, up and away. And so, but today that wasn't as evident. Initially, we started a little bit up, and then the sellers came in and boom, 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 boom. They did all of their selling, and then we went up. But it wasn't just, it was a steady climb, but it had these fits and starts, a little down, a little up, a little down, a little up. So if we broke it down to within those hours, that it was very, as we might call it, it jerked around quite a bit. If we're getting a C wave down, it should be more like we had today, you know, off of the high. It just kind of dropped pretty quickly, steadily just dropped. And we should see that same thing tomorrow, if indeed it's a C wave. Otherwise, we're going to put the 4 there and we're going to be off to the races. So a break above 47.12 kind of puts a cap on that 4 down here and leaves us open to at least 47.29, if not higher. That's where I'm going to leave it for right now. And our next update will be Thursday, the 9th.